Good morning or evening, everybody. It has been a crazy year. At that, we're closing 2023 out, the final week of the year. S&P closing kind of on a muddling note, not really anything interesting, but what is truly amazing is the year run end. The S&P unofficially rose 4.42% for the month, and then 24.23% for the year. One of the most spectacular years, probably going back to the 1990s for the S&P. The Dow added 13.7%, the Nasdaq adding 43.42% unofficial on the year, and that was a crazy year at that. And it doesn't even highlight the year until you look at a chart. If we look at this, guys, it's pretty amazing. Completely engulfing candle on the SPX. If we take a look at the Nasdaq's, even more impressive at that. And I do want to take a moment to just take a look at the last time this happened. If we actually have to go back to the 1988 rally, and we see that we basically had a bearish year out there, and then basically we kind of just set up for that bullish rally going back to around the 1991. We can also see it here in the 1981. So 1981 was almost a mirror image of what we had now, where strong year, sold off, cut to the lows, push back up higher. And ever since we basically started pushing, it kind of just kept going. Yes, it resulted in the dot-com bubble, but that was multiple years. And we're going to talk about a lot of stuff today, guys. We're going to talk about the bears positioning into next year, how the bulls are positioning into next year, and a whole lot of stuff. So make sure you guys stick around for that. It will all be timestamped down below for you. And the week, as I called it, not tooting my own horn, it is quad expiry week. So again, we have quarterly expiry of options. I basically said we would be on a pathetic week, probably not doing anything. The market makers, we're going to want to keep it right there and then. And what do we have? 0.32% on the S&P. The Nasdaq was even better, 0.28%. So we took everyone by storm. We completely obliterated the theta. We took everyone's money, the bulls, the bears. The market is the most efficient at taking everyone's money in the shortest amount of time. So again, keep that in mind for going into 2024 when I think everyone's emotions are riled up. Like the bears want it, the bulls want it. It's going to be a slaughter fest. We have not seen anything in 2023 where we're going to see in 2024. I foresee an even more crazier year that's going to be jam-packed with an election, jam-packed with a debt ceiling, jam-packed with the Fed rate cuts, jam-packed with the reverse repo, jam-packed with the bank short-term funding program expiring in March. Is the Fed going to extend that? It's going to be a crazy one. And speaking of craziness, the video we did, as you can see on the screen here, that it did pretty amazing on episode 1 of Theta Mining. We're going to definitely do episode 2, so make sure you guys stick around for that. And as a sneak preview of what the P&L was, here's your sneak preview. So you can kind of figure out how that portfolio is doing so far. We're going to be talking about some of the rules that I set up for myself in that video. Should be coming out in the next couple of days. So make sure you guys are subscribed, bell notification on, and hit the like button. And as always, throw a comment down below of what you like about these videos, what you want to see in the videos, what you want to change. We're here to cater it to you. So without further ado, let's just dive into the recap of the week. So pretty much a very lackluster week. So we pretty much have a very simple setup for next week, and we'll get all into these levels in the key level section of the video. But I just want to show you the range for the week was pretty very small, 1.28%, not really a large range on the week, which could set up for one of these more movement candles as you saw back here. And I do think we're going to get a pullback. And why do I think we're going to get a pullback? Well, I think the market's been running and the volume's been decreasing, and we have to actually go to the economic calendar to really see that. This week really didn't see much, but one of the big notes on Friday was Chicago PMI. Chicago PMI came in below expectations significantly, missed it by nearly a large miss, even though it's only 4 points. That's pretty massive on the PMI scale. These things really don't shift around too much, but as we can see, it was 58 all the way to 46. That is a massive contraction. Now the data can be revised revised. However, you don't get this till a month from now. So the market runs on the data it has now, not necessarily what everyone predicts. I think 2023 was a very excellent year of showing that you can have a perception of what the market is going to do. History most likely will make you right in the long run, but you're not here to show up to be right. You're here to show up to make money. So as perfect segue into that is how the short positions still holding at 193K. We definitely could get a short squeeze. I would really, if you're a bull, you really want to see the market kind of tip down, re-embolden those bears to even go doubling down on that position, and then really hammer them with a nice rally. That would really set up that bullish 2017, 2019 rally in the market. But really nothing much other than that happened this week. We had initial jobless claims ticking up, but it's not severe enough in my opinion. You're not really seeing this massive fluctuation going back to, we looked at 2015, 2017, we looked at 2007, 2005 in previous videos, and it basically just kind of was like meh. You don't really see that degradation. You see multiple weeks and multiple months of degradation. You don't just see a drop out of the sky. And you guys are probably, if you guys are a viewer of this channel, you're like, Mike, you're sounding really, really bullish. Well, I'm looking at the charts and basically saying, yeah, we're probably bullish Q1. That's at minimum, we're probably going to be bullish Q1. And what we kind of start off the year with basically non-farm payrolls. So non-farm payrolls are on Friday. Just a quick recap of that. They're expecting around 158, previous 159. So kind of that cooling of the average hourly earnings. So nothing too spectacular on those payrolls. However, it would be, according to seasonality, unemployment rate ticking up a little bit. Again, seasonality piece going into December, holidays and stuff like that. So looking at this, I don't see the same job degradation that we saw in 2007 yet. Guys, I still have my bearish theory. Like, I'm not giving up on that until the yield curve uninverts, and then we can safely say that, hey, we've avoided a recession. Until that happens, I'm still going to say long-term bearish. I really don't care if we're bearish or bullish. I'm going to make money either way, aka data mining portfolio. So that'll be linked down in the description below if you guys want to check out that episode. Really crazy that that episode got 400 views in literally 24 hours. So thank you all so much. And if you haven't seen it, check it out. I'm going to try giving you guys more guidance on how you can set it up. And it's only $5,000 that I'm running on that exposure right now in that portfolio. And it's making a pretty decent return on that investment. So we'll be talking about that even with this crazy week of kind of just doing absolutely nothing, making a killing. So without further ado, Fatal's going to give you guys the biggest winners and losers. And then I will be back for the key level section of the video.
And we are at the end of 2023, and I gotta say, I'm gonna pat myself on the back here because I was correct. In November, I said, guys, that the S&P will end near 52-week highs by the end of the year, and there we go. And I pretty much just said that at around like November, right around here, when the FOMC happened, and we ended the year with the S&P at 4,769 points. So I'm gonna pat myself on the back for that one. Not necessarily a good thing though, but still was correct. Now, we didn't have any earnings for this week. However, we're starting earnings for 2024. Well, actually, I guess the earnings would be for Q4 of 2023 in 2024 on January. I believe this is going to be January 3rd, Wednesday. And we can see that there aren't that many big ones here. The biggest one would actually be WBA Walgreens Boots Alliance, you guys can see right over here. But aside from that, we're mainly just waiting until the 12th when the bank earnings actually begin. Alrighty, so now let's take a look at the heat map. You can see that it's actually kind of flat. There was a massive sell-off. I wouldn't say massive, but there was a decent sell-off yesterday on Friday, mainly because I think tax loss harvesting was occurring. But aside from that, you know, it is what it is. Alright, so looking at now the technology sector, we got over here, when it comes to the worst performer being Synopsys, losing 8.04%, and the best performer being the company Ansys, gaining a whopping 19.7%. The communications sector was rather flat. We could see that the worst performer was none other than the company Disney, losing 1.88%, and the best performer was Match Group, gaining 3.87%. When it comes to the consumer defensives, we can see that most of this was actually in the green. Only 3 of them lost. We got over here Bungie Global losing 0.28%. We have over here Cisco Corp or Cisco Corp losing 0.54%, and the worst one was none other than Brown-Forman Corp losing 0.77%. Aside from that, everything else gained. You can see here that the best performer was Dollar Tree, gaining 5.75%. The healthcare sector was also decently in the green, as we can see over here. Worst performer was the company ResMed Inc., only losing 1.6%. And the best performer was Moderna, gaining 9.09%. The financial sector, specifically the banks on the 12, is going to be something to look at. We can see here that, again, pretty decently in the green as well. I think only a few of them lost. Wow, that's actually kind of crazy. Worst performer, though, in general, was none other than the company Everest Group, losing 1.13%, but also looking at PayPal, it lost 1.05%. And the best performer was the company NASDAQ Inc., gaining 3.65%. The consumer cyclicals is actually one of the reddest that we have seen so far. Wow, that's actually kind of crazy. We can see here that the worst performer is, again, Nike. Guys, after their earnings, and when they said sales are actually weaker than what they expected, they just completely crashed, down 11.39% on the week. And not only that, they crashed all other shoe companies too. So yikes, right? Absolutely yikes. Anyways, when it comes to the best performer, we can see that it is the company Best Buy. Wow, gaining 3.25%. Looking at now the industrials, most of this is actually in the green. In fact, there's only a few of them that are in the red, but mainly this is in the airlines. We can see over here the worst performer was the company American Airlines, losing 4.25%, and the best performer seems to be the company 3M, gaining 3.56%. Looking at the real estate sector, again, most of this is in the greens. We can see over here, worst performer, it is the company Kimco Realty Corporation, losing 2.43%, and the best performer, there's actually two of them, and that is the company UDR, gaining 2.71%, as well as EXR, gaining 2.71%. The utilities have rebounded nicely ever since they collapsed a few months ago. We can see that there was only one loser the whole entire week, and that was the company Constellation Energy Corporation, losing 1.2%. And the best performer, it is the company Edison International, gaining 3.8%. Comparing this to the energy sector, we can see that this is mostly in the red. There's only one. Wow, there's actually two that gained and one that did zero. That's actually kind of hilarious. Worst performer, though, it is none other than the company Marathon Petroleum Corp, losing 2.82%. And, well, the only ones that performed in the positive were Baker Hughes, gaining 0.41%. And the best performer, we got One OK, or Onico, I think that's how you say it, gaining 0.99%. And lastly, when it comes into the basic materials, we got over here the worst performer. We got the company Steel Dynamics, losing 1.74%. And the best performer, it is DuPont de Nemours, DuPont, basically, gaining 3.46%. So on Friday, markets actually fell, but in the week, because you guys can see that it was essentially flat. Now, if we actually take a look at this on the year-to-date performance, we can see that this is, man, only a few of them fell massively. Basically, if you were anywhere in the technology sector, communications, consumer cyclicals, financials, even though banks collapsed, and a few of the industrials, you did very, very well. Now, the utilities ones were by far one of the reddest sectors, as you guys can see over here on the year to date. But if you did manage to buy when they actually fell, you're up significantly when it comes to this sector. All in all, 2023 was an insane year. Absolutely crazy. We'll see what 2024 has. I mean, I have no clue what's going to happen. So, with that said, make sure to like, subscribe, comment. It really does help here with the algorithm on YouTube as well as Rumble. So, take it away, Mike.
So guys, something for 2024 that I want to talk about is I'm going to start showing you guys the Lux Algo chart, kind of showing you some of the indicators and pricing in that area with this so we can kind of see multiple things. Let me know in the comment section what you think of it. And do you like the older version where we just kind of did the standard chart of the moving averages, or do you want something a little more advanced like this? So going to the S&P, again, I pretty much predicted this, and it's not that I predicted it, it's just I've been screwed over in options trades before, so I've paid the tuition. I know what quad expiry does. Market makers are there to pay the least amount of premium, or if they choose a direction to run it, they just keep running it. So when I saw the market basically going sideways, I was like, I really think that they're just going to burn premium going to the end of the year because they really don't want to disturb their balance sheet. So they just want to close out the fiscal year and basically say, hey, this is where we're landing, this is where we're at. And you couldn't paint a more beautiful picture at 0.35 on the week. So jumping over to the day, as you can see here, we basically topped the range, bottom range, smack down in the middle of the weekly range. We did hit the trend line catcher that was sitting at 473.55. Trend strength sitting at 72.96%, but volume is sentimenting lower. So that's where I'm kind of seeing we have a lot of this consolidation in this region. But it wouldn't honestly be that bad to take a nice dip down. And we could even get like a 30% retracement. That would bring you kind of back down to this lower area of consolidation, 468. That would be a nice pullback. Because one thing you have to note, the S&P is actually, if we zoom this chart out, we are very close to all-time highs. All-time highs on the S&P, I'm going to take and snap a line for you guys here, and we're going to make it blue so you guys can clearly see that. So one of the things that I don't like about price action is that we're not really like pounding through that level. Like we don't really have that steam built up to pound through that level. A pullback, kind of consolidate, then ramp back up like something like this, pull back to about here, and then ramp up through there would be the most ideal situation. And we basically can identify that if we start coming down to that 473.55 or 473.30 level on the SPY. And again, we are kind of bashing into this reversal zone as you see here. Bash into it, pull back, bash into it, pull back, bash into it, pull back. Usually after the third time, the trend kind of reverses where you're not able to make further movements forward. Now, we did cover in the beginning of the video that the net speculative positions are basically doubling down or tripling down at this point. And I'm like, look, I was the bear that tried shorting the market in SPY, like got my ass basically just handed to me. So being transparent about that, I understand that I kept fighting the dang market rather than just saying, hey, how can I make money off of this? And right now you're above the 200-day moving average, you're above the 50, and we're gonna actually jump over to the other chart real quick just to see that. So right here we have the 50-day moving average that is significantly far away, 450 for the SPY. That's pretty significant. We got the 9-day moving average sitting here at 473.95. So if we get two closes below that moving average, then we could establish a new trend. And actually how we basically been just consolidating in this area, kind of breaking these trend lines, it is indicative of a pullback coming. And again, where can we pull back to? So if we just draw a simple retracement, 50% is 465.93, or even a 30% retracement, 468.16.7. That's not a huge pullback, guys. Like you kind of embolden the bears, and if you're a bull, you kind of want that buying opportunity. You're not buying at very high premium, and then you just kind of reverse down and head in the right direction, basically back up. So looking at it from a holistic standpoint, I would not be surprised if we get a rally on payrolls. Trust me, I wouldn't. There's plenty of bear fuel out there. And I wouldn't be surprised if we get a pullback. So those two scenarios right now are 50-50, depending on what the market makers want to do. Now, fair disclosure, there is 401k money coming in, Roth. People want to load those up early in the year so they take advantage of the entire appreciation of the market. So there is a bullish component coming in on top of a short squeeze potential. So it's more leaning maybe 65-35 basically split for the bulls for bear scenario when I say that. So there's definitely potential out there, and the NASDAQ is kind of going to give us, I think, the broader expectation of that. So NASDAQ trend similar to the S&P, volume sentiment as well. Out there. So 408.01 or 407.58, that region is where I'm going to be looking to say, okay, we're breaking this. Now we could be heading lower, and the NASDAQ is at all-time highs or broke to new all-time highs. So if we just take a look at this, it absolutely like just smashed all-time highs, and we're going to snap a blue line to what that all-time high was so we can see exactly where we are in retrospect to that. So we basically broke through it, and now really we should fall back below it because that's massive push. You establish, get a pullback, and this retracement right here, this would be pretty massive. We've retraced 30%. Looking at 401 being the area, or even 397.79. That's an area where I can really get back behind another rally in the market. Again, re-embolden the bears, have them short the market, and then blow it out, kind of stop loss, blowing all their stop losses. That's where you would really want to be at. And if you really get a crazy discount, like we're talking like massive, just pulling back to 386 with this long trend line that we had here on the NASDAQ, basically setting up going back from quite some time. And that would basically establish a very interesting trend. And just correcting it here, you can see those 2 points touching, coming back somewhere in March, maybe to this trend line, or just having like a very sideways January, February. That's not completely unexpected. So looking at it, NASDAQ, if you break above 412.92, that's going to continue that rally. Breaking below basically 408 flat is probably going to lead you down more towards the bottom. But then again, we have to see how that all plays out. Really, 407.5 is the line in the sand. But again, more things can happen. Now, Russell was more interesting this week. So if we jump over to Russell, we have an inverted hammer. Small caps have been running like crazy, guys. So this does not actually surprise me that the small caps actually had a significantly bearish candle. Now we could see money rotation in there. We could see different things. But again, Russell is significantly undervalued. Notice how we didn't talk about the Russell in the beginning of the video because it's not above all-time highs. It's actually still got another 20% to run, which is one of the hallmarks that this is a fake rally in the sense of the long term. I'm not saying that this thing's gonna reverse on you like Monday, right? I'm talking about Q3, Q4 of next year. We got some things ahead of us that we're gonna have to like keep in the back of our minds. So Russell 271, right where your closing price is. That's pretty bearish. We're below the trend. The trend's weakening to 50%, probably going to weaken further unless Russell basically pulls one out of nowhere. And maybe we come back to this area of consolidation that we had here. Probably the 197, 196 area is where I'd be looking, hey, maybe we catch a reversal there. Again, remember, on the Russell, we do have this gap right here at the 495.95 level. Coincidentally, that rhymed. But if you look at there, that's where we're basically, hey, if we start getting down here, we really have to start flipping our mentality to being more bearish small caps. That's not necessarily mean that the SPY and the bigger caps don't rally. And we'll talk about that in just a moment. I want to show you guys Apple's and Microsoft's charts, which is basically the S&P and the NASDAQ, like a huge percentage of it. So it's very heavily dependent on them. But this is telling me that, okay, small caps had a massive run. Maybe they're coming down now. Maybe we need to refocus on where things are going, and we're starting earnings season. So we're heading into the second week, I believe. If we pull up our good friend JP Morgan, we can see the earnings Friday the 12th, second week of January. So that's going to be a pretty interesting one where second week of January, we get payrolls this week. I believe CPI the week after that, and then bank earnings. So pretty volatile concoction right there. But then again, we have to see how this all plays out. Again, small caps could go lower, small caps could go higher. But really, the story that we want to talk about is the dollar. The dollar actually has an interesting story right now. As mentioned in the previous video, we saw the bounce on this wedge that I was saying the dollar isn't a wedge, came back down a little bit lower. As you can see here, we basically said, hey, we could come down lower, bounce off this wedge. We're probably heading up towards the 101.637. And let's see what happens after that. Usually, as we saw here, previous wedge bounce, break, kind of consolidate around that 9-day moving average, break above, hit your head on the top of the wedge, and then come back down. So again, dollar could revamp itself, kind of hit this upper edge here, break down one last time, and then break the wedge to the upside. So we definitely got maybe until February before that really kind of just plays out just looking at it. But then again, dollar could break out now and we could get a different thing around the 15th. And then again, that is coinciding coming up into the Fed meeting. Maybe we get a Fed speaker or something like that. We're going to keep you all updated on that. VIX just kind of doing nothing, right? So volatility being very, very lackluster going into 2024. Could it pop? Yes. Will it pop? Most likely. Will it happen in the next month or two? I have absolutely no idea. Everyone that's saying volatility has to do something, guys. Everyone said that, even myself, in 2023, and we were wrong. So I'm not going to keep preaching the same stupidity that I was preaching before. I learned from my mistakes. Yes, VIX will pop eventually because no bottom has ever been found in the market. Now, this could be a first, and I don't believe that, but the bottom could be found, and I would recommend you guys watch Heresy Financial's latest video about 2024. He gives a lot of insight into what market makers think and how, because he worked for them. So he kind of talks about that. I highly recommend that. I will link his video down in the description below. So make sure you guys check that out along with the data mining video and all our other videos. Thank you so much for being a subscriber to the channel. We really appreciate you. And if you guys are not subscribed, so maybe take a glander down there and subscribe to the channel. We try to cater to your videos, or throw a comment down there just to see what you think, what you would want to see on the channel. So going back to VIX, nothing really crazy. And the last two topics are yields. Yields basically kind of finding a bottom around that 4%. They're basically saying that's where the Fed is going to cut to, coinciding with the CME tool. If we go all the way to December, they're saying that we're basically going to get cuts all the way down to 4%. So that's nearly 150 basis points of cuts. That's assuming like 5 cuts. So we'll talk more about that in the debate section of the video. But this is where yields are basically pricing to. The yields are saying, hey, this is where we're going to see longer term rates kind of staying at. If we look at the 10-year around there, if we look at the two still holding above the 4%, but a significant decrease from 5%. So short-term debt up to 6 months is still kind of staying in that 5% range. You can't get the high of 5.5, 5.6 premium anymore, but that 1 year, again, is kind of curving down, and the yield curve is basically just kind of doing its thing, just going sideways, not really doing much. So do we see an inversion in March or April? Do we just see it kind of go flat for 6 months? So if we consider this being the flat phase, you're looking at, that's October, so that's 3 months, October, November, December, and then March, coinciding with the bank term funding program basically going kaput, all the unrealized losses then becoming realized losses for the banks possibly. It puts a very interesting thing into perspective. And if we take a look at the overnight repo went up to $1 trillion. So we broke below $1 trillion. That was a pretty notable mark. We went down to 628, I believe was the lowest point, 683, sorry. So around that point, we basically just, hey, yields started going down, which made bond prices go up. Liquidity was pushed into the market. Everyone's running to the bond market. That's not necessarily the greatest thing, because really, if this was a true bull market rally, long term, guys, not talking short term, talking long term now, we would see a greater rally in the stock market. People be basically dumping bonds because their return on investment would not be equal to what the stock market could return. Yes, I know the stock market returned 25% and 47% on the NASDAQ. That does not necessarily mean that that's going to be the expectation for next year. And corporate earnings expectations are extremely exceeding what would be in the realm of reality. So we're going to see how this earnings season turns out. Are people going to be excited to buy the stock market? I believe there's a lot of FOMO that's going around, especially with fear and greed being at 76. So that's going to be a very interesting point of contention for the markets. As we stay in extreme greed, we can't stay in extreme fear or extreme greed for an extended period of time. 2022 and 2023 showed us that very much. But again, payrolls are probably the only thing, and they're not even going to be crazy. So if we look here, we got global composite services PMI expected to go up. So we have to see, are we going to get more evidence of that Chicago PMI in the broader S&P, or are we going to see other things? We got job openings expected to basically come in flat from the previous month, and we got FOMC minutes. Oh boy, are we going to be in it for a spicy week. I don't believe FOMC minutes are going to move anything, just because we have to see what they're really not going to put anything. They haven't put anything for the last 3 minutes that contravene the points that Powell basically said in the press conference. And he said, yeah, it's going to be in the minutes that we talked about this and that. So am I really seeing anything here? Yes, there are 3 stars. That doesn't necessarily mean it's going to move the market, but we see manufacturing contracting. We kind of know that the global manufacturing is contracting. Initial jobless claims not really posted. ADP non-farm payroll staying. So we just see flat. We just see flat. So is it going to be a lackluster week? Very well could be, just a push and pull between the bears and the bulls, kind of just duking it out. But it's going to be a pretty, I would say, interesting start to the year. I don't think anything comes out crazy. I could be completely wrong, guys. So make sure you throw in the comment section below of what you think this start is going to be. And as always, we will now get into the debate section of the video where we're just going to kind of give you guys our closing thoughts on 2023. So we'll start off with you, good sir. What do you think 2023 is going to be?
You mean
or 2024? Wow.
2024. I have no clue. Like, I really wish I would know, but we're getting to the point where it doesn't matter anymore. Like, I was on X, and you know, there were these people that were like, right now on Twitter, it's like 50-50. Some people think that we're gonna get a recession, other people don't, and I'm just like, who knows at this point?
You can get both, because you have plenty of bear fuel out there. You don't, again, 2023, like I mentioned in the beginning of the video, has been a year of everyone's trying to force the market to do what it thinks rather than just going along with the market. And there's no data that supports that recession's on the next week, next month horizon. I do believe that we're going to get some form of recessionary bear market destruction of the rally, which is traditionally history by the leading and lagging indicators in the market. However, in 2005, you had indications that that was coming, and you didn't get it until 2008. So you could be looking at one of these like 2022, 2023, 24, 25 scenarios where it's going to take some time. Again, I basically said in the beginning of the video, would I long stock? Absolutely not, until the yield curve uninverts. That kind of is the Grim Reaper sitting in the corner that I'm not willing to bet the long game on. It uninverts, so we don't crash, sure, long stock.
Really? So what I'm referring to the fact that I just don't know anymore is because, well, again, 2022 was the shortest bear market. Aside from 2020, it was the shortest bear market because as soon as 2023 hit, it was just skyrocket up. You had bank failures. Still did not, like, it didn't waver. You had, you had the Fed increasing rates. It still didn't waver it. And I'm just like, what's going on here? So I just personally don't know. 2024 right now, it's honestly, and then add on top of that an election year. Yeah, no, this is literally like.
So in 30 seconds, sum up what you think the greatest threats are for either the bulls or the bears in 2024.
The election.
Okay. Anything else?
Honestly, that's really and cutting of rates.
I think for me, it's going to be the debt ceiling negotiation in January, the reverse repo kind of doing nothing right now, but it could be interesting how that pairs up with the bank term short lending program.
It's above $1 trillion.
Yeah, it's basically going sideways. So I could foresee it going sideways because bond liquidity, everyone's running to the bond market, which is not necessarily a great sign. But then again, it's a crowded trade being uninverted. So
right,
the pick your tomato. But I think the short-term threats are the debt ceiling negotiations, because that has impacts on debt markets. I think the bank term funding program in March expiry, we really haven't heard the Fed give us either way which way they're thinking about it. But I think that their lack of talking about it is they're basically saying, yeah, banks, you're on your own. But it could be because, like Powell's basically indicate, we're not here to save them. They do other things, but we're not going to dive that rabbit hole right now. And I think just the slowing of the economy. Do we see more cracks of the Chicago PMI that we saw on Friday? We're going to get more PMI this week. That'll be a kind of early warning sign indicator. But other than that, it could honestly be like you got to wait for the data. You have to show the data in order to actually turn down.
And we're also getting, I believe, job numbers on Friday.
Yep. But they're supposed to be flat. If we take a look at them real quick, they're not really exciting. Like either way, like either camp's not going to get, like the Bears want to see like this massive job numbers. So because the Fed's then, but at this point, jobs has become so like, it's destigmatized because it's like you have to get like zero job growth for the Bears to basically say recession's here. And then anything that's positive, the Bulls are going to be like, look, great economy. And the Fed's going to be like, we don't care.
Right. Well, at the same time, remember, it's now the opposite. If you have massive job numbers, that's actually bad for the Bulls. So, yeah.
Well,
at the end of the day.
Well, the thing is, I don't know about that because the Fed is basically kind of just like, they waffled around the job market thing so much where they're just like, before they were like we have to see lack of job growth, right? Then they turn to, well, maybe we can have a soft landing without having jobs degrade. And now it's, well, they've muddied the water so much that I think you destigmatize jobs unless there's significant swings, meaning like if they're predicting 200, we get a million, like some ridiculous number like that. I think the average hourly earnings is going to be more key. Do you see a massive spike in it? Do we see unemployment start ticking up? Like, I really don't see the fervor we used to see back in beginning of 2023 about jobs, about CPI. Right now, everyone's just kind of pricing in these cuts.
Well, I'm actually fairly curious as to what the market will do in the beginning of 2024, because when 2023 hit, it was a skyrocket up. So, that'll be fairly interesting. But going back to the whole thing, my dude, the S&P 500, I was right. Like we hit 52-week highs by the end of December.
Right. Yes, you're.
Yeah.
more like when Mike said, no, that's not going to happen. The market was like, hold my beer.
And I predicted that in November, pretty much right. Well, the second the Fed came out with their FOMC in November, I'm like, that's it. We're going to hit 52-week highs. And I freaking called that. Now, what happens after that, I have no idea. But at the end of the day, a lot of people are posting their W's right now on X. And I'm just like, guys, a lot of people are just like, oh, you see, like, they were expecting a recession and now they lied. And if you listen, I'm just like, well, that's why I'm just so confused at the current moment when it comes to everything.
Well, the famous Jerome Powell meme, if you can't convince them, confuse them.
Well, yeah, but I'm the one that's getting confused.
Exactly.
I'm the one that's getting confused.
Hey,
because
do you want to be more
confused? It doesn't matter anymore.
Do you want to be more confused? And we'll wrap up with this.
What's up?
A look at the December rates so we're currently at 525 to 550. Their median expectation is 1.5% in cuts.
6 cuts. And that's what I'm talking about, man. Like, it doesn't matter anymore. Fundamentals clearly just don't matter. To be fair, fundamentals haven't mattered since like 2021. But like we're going back into it. We are going back into the fact that like companies are posting bad numbers, and yet it don't matter. Stocks only go up.
Well, funny you bring up company earnings, and I'll close with this. But I think, closing this chapter real quick here, I think they're getting ahead of themselves, and I think you will see a pullback in 2024 when this reprices. Not significant. I think this needs to be repriced and data has to come out, CPI, PPI, that shows better trend than the Fed is seeing now to kind of maybe foster in this scenario. But I still think at that point they would run heavily even further, saying like 2% cuts or something like that. But too long didn't read version about company earnings. The expectations for next year's earnings are absolutely like bonkers crazy. And I think it's going to be the expectations are being set super high. Whereas this year, like it's the reversal, right? You talked about this 2022, we reversed to 2023. And then 2023 reversed to 2024, where 2023 was company earnings bar is set super low and they can hit everything. 2024, because of this spectacular year, they're setting this bar. Like, I'm looking at some of these earnings of like major companies. I'm like, you guys lost your minds a little bit right there. And it's going to be very fascinating to see the reactions. Again, we only have to wait 2 weeks to see the bank reactions. That's kind of going to set the tone of what's expected from these earnings.
Which we are, by the way, going to live stream, right, Mike?
Yes. Okay. Especially that Friday. Friday the 12th. That's going to be great.
Yeah, it's going to be awesome. But let's actually end up with the fear and greed, shall we?
Oh, yeah.
Because that's how we always end it.
And greedy.
Dude, like a few months ago, this thing was at extreme fear.
And I actually mentioned it in the beginning of or middle of the video. We can stay in extreme greed for a very long time.
Yeah, I believe that. But anyways, guys, that pretty much does it for this video and the last of the market update videos for 2023. Wow, that was it's kind of crazy that we've been doing this for an entire year, because you started doing these in January of this year.
I think we started week We did this video, then in like February, I think I started with like this like format kind of.
Yeah.
So we've been doing this for quite some time, and thank you all so much, guys. You guys made this an amazing year, and I hope next year is going to be even crazier.
I don't even want it to be good. I just want it to be chaotic. That's really it.
You just want you're
really
the chaos person.
Yeah, I mean, that's
To me, it makes no difference as long as I can mine my theta.
Exactly. There you go. By the way, episode 2 on theta mining coming Monday.
Yes, I'm going to try it for New Year's Day. That's when I'm hoping to have it out.
Okay. That pretty much does it for this video, buddy. Make sure to like, subscribe, comment. Really does help her with the algorithm on YouTube as well as Rumble. Make sure to follow us on X. And here's to the end of 2023. And here's to 2024. Let the chaos begin.